So I'm with you for 1 hour with M81 this afternoon. Some of you may well know the setup of these types of webinars already, and if you do, great. If you're joining us for a second time, then happy days. This is ultimately looking at kind of a revision, what you need to know, mainly for the multiple choice element of the actual exam. So we're going to be looking at that within the next hour, and I'm hoping to do all 9 chapters as we go. I did have a few problems with my Zoom, so my colleague Lily is kind of here to help me because I'm missing my toolbar, but otherwise I'm hoping that everyone can hear me and see me okay. Okay, wonderful. I will get going just in the event that I don't want to run out of time. So let's just get a move on in terms of looking at the M81 context and the content that we're going to be focusing on today. And this session is being recorded because it then goes on our social media platforms. So don't worry too much about that. But in terms of the chat, I can just about see it and view it. But I would very much appreciate it if you could take all questions just at the end, if that's okay with everyone, primarily because we're going to be going through just the kind of the key highlights of what I think you should know for the multiple choice. And then at the end, again, technology prevailing, I will give you a link to the latest past paper and we'll talk through some other elements as well. So let's get going. In this particular book, it's a well-written book, I think. I think it's a very good, nice size. 9 chapters isn't insurmountable, but note that there are 7 learning outcomes. And so those of you who are familiar with the CII kind of setup, you may know that the learning outcomes don't always marry up with the chapters. So for example, learning outcome 1 here, understanding the key aspects of the regulatory and legal environment in which brokers operate, is worth 17 questions in the exam, and that goes over chapters 1, 2, and 3. So just be mindful of that. I'm going to also be focusing quite a lot on learning outcome 3 today, because that's got a number of marks as well, 10 marks there. And then the rest of the marks are kind of fairly evenly split across the chapters. So just kind of be mindful of that. At the beginning of each chapter, I've just put the learning outcome in brackets for your purposes, just so that you know roughly where you are in the book. Now, for the middle section of today, I'm going to go across to mind map. So it isn't all slides, but ultimately, these courses are to kind of introduce you to the book if you haven't kind of got to grips with it already, and then also for those people who have got their exam kind of imminently. What we do as part of these webinars, for those of you who are here live with us, we give you free access for the weekend to our on-demand course if you haven't got it already. So please do let my colleague Lily know in the chat if you want access to that at the weekend. I'll remind you at the end as well, but just drop your email address to her and she'll be able to sort that out for you. Thank you very much. Right, let's get going. You've got 1 hour in terms of the actual exam, and then there's 50 questions altogether. So you'll see that reasons why I've pointed out those 17 and those 10 is because it's taking over kind of almost 2/5 almost of the actual exam itself. So chapter 1 focuses on the legal environment. I would say in terms of the time frame that we've got today, I'd very much like to focus on these 3 chapters because they build upon what you've learned at certificate level. And then I would really like to get to kind of almost halfway, not so much that you're all completely out of steam, but I'd like to get to chapter 7 because chapter 7 is a bit of an unusual one. It does throw in lots of other new things into the mix that you may well have come across on a day-to-day environment, but not necessarily in the CII books. So with that in mind, just one caveat for those of you who are broking day to day, just know that some of the terms that are used in the CII book might be slightly different. And so therefore, just be mindful that they might refer to things slightly differently. And in your commercial setting, you might think that there's something different. So for the purposes of the exam, just try and learn what's in the book for there and then let it go out of your mind for the day-to-day stuff. So chapter 1, I've limited myself to a few slides here, just looking at kind of the key areas for the regulatory and the legal environment. So we're looking here at, first and foremost, our old friend, the law of agency. And most of you will remember this from your certificate level. You're looking here at the normal kind of setup. The tri-party relationship for the law of agency is the fact that the client normally takes the role as the principal, but the broker will always be the agent. Whether they're working on behalf of the insurer or the insured at any given time really does depend on the circumstances. And they talk a little bit around the first kind of parts of the book about who is the actual client. So there are so many people and so many entities that can be involved in an insurance transaction. You want to know who the broker, who the agent is working for at any given time, because this changes depending on who they're looking after. So with that in mind, I would just mention as well, one piece of case law that is referred to very early on in the book is called Merritt and Babb, and it's about the fact that an individual can take individual liability for the advice that they give and so on. This was about an estate agent, but ultimately they were an agent of their client and they did get sued personally. Now, I'm not going to focus too much more on case law today, primarily because it doesn't tend to crop up in the multiple choice as much as you think it would. The actual names of the cases don't tend to form, but the actual ratio, the reason for deciding the case does come up in the exam a little bit more. But also because there is such a wealth of case law in the first couple of chapters of this book, it's much more likely to be actually questioned on a coursework question rather than a multiple choice. So just to bear that in mind. So in terms of who the client is, who is the broker working for at any given time? So the retail broker, if there is one, acts on behalf of the insured. However, if there's a wholesale broker involved, remember they're acting on behalf of either the retail or the introducing or introduction broker. Therefore, the retail broker is their client. If you go into the reinsurance realms, if you're a reinsurance broker, ultimately they're looking to work for the ceding insurer, so the cedant, to actually manage that session of reinsurance to the reinsurer. So at any given time, just make sure that these are going to be the first couple of questions on your multiple choice. Just have a look, read it through carefully and see who exactly they're working for on a particular timescale. So as we've just suggested, they can be working on behalf of both in some circumstances. So a couple of examples there that they talk about in the book are issuing motor cover notes, certainly binding authorities, we'll talk a lot more about those a bit later on, and delegated claims authorities. And then also whilst completing the proposal form, because you're gathering information on behalf of your client for the purposes of the insurer to actually review that information. Now, in terms of duties, the agent has a lot. The principal, not so much, but the agent definitely has a lot. If you've done MO5 or if you've done certificate level modules recently, you might remember, if you've been with us before, we've got a couple of acronyms to remember some of these duties. There's about 5 of them all together here, but they're just worded slightly differently in this book. So they talk a little bit about, so we have seen before obedience. And so here they talk about agents must obey instructions. They have to seek clarifications if those instructions are unclear. And they can be expressly written into a TOBA, a terms of business agreement, so that broker at any given time knows exactly what they're supposed to be doing. If the agent has failed to exercise what we call reasonable skill and care, that failure can lead the principal to holding them legally responsible. And so for that reason, we're looking there at making sure that we're aware of the fact that the principal can go after the agent and try and get compensation from them. They also have to perform the duties themselves. So if I'm hosting this, I can't delegate my duties to Lily on the basis that it's supposed to be personal performance. And so I have permission from my principal, Empower Development, to actually run this course. And so therefore I'm not allowed to delegate it. The only things that I can delegate are administrative in nature. And so again, ultimately Lily helping me out with the technology for today. So all of these things can come into play when we're thinking about the duties. One thing that is mentioned in this area is in relation to trust. So the relationship we should know between an agent and a principal is a fiduciary one, which means that it's one of trust, and therefore brokers need to have accountability when it comes to money, when it comes to records. The parties need to trust each other. Okay. A couple of other things just to mention there. In terms of standard market practice, we have a couple of ways that brokers are remunerated. Now, I would say it depends on what classes of business that you're seeing day to day, but for the most part in the London market, we tend to use brokerage commissions in terms of paying the brokers. So we need to be careful that those commissions are transparent, that everybody knows what is supposed to be coming to them, and that the broker doesn't receive what we call secret profits, because if they do, they essentially have to declare these to the client. Certain things will be, we can have fees in lieu of brokerage or commission. And then again, unless permission is given by the client to receive additional income, the broker is not allowed to do that. We'll come back to fees a little bit later on, so I won't leave it just there for now. In terms of conflicts, Brokers absolutely have to be mindful of avoiding these wherever possible. And so there's a list of conflicts and ways that they could arise within the book, but just to name a few, personal things, so working with your husband or your wife or your mum or your dad or whoever it might be, and looking at the kind of overlap in insurance and reinsurance placements, as well as, you know, the fact that you've got maybe claims handling authority or links to a particular broker. So all of these things can arise. And in the kind of payment of money, sometimes there can be conflicts where a broker is actually offered what we call an overrider or some kind of other inducement or contingent commission on top of perhaps what they would normally get. And that's to write more business. So we need to be mindful of those areas as well. In terms of the duties for the principal, as I said, only 2 to remember. Provide remuneration to their agent, so pay them essentially, and then indemnify them. So if I was to get an agent to go and place business for me over in the States, I would pay for their travel expenses and their hotel accommodation because I'm indemnifying them for what they're doing on my behalf. We also have the latter part of this chapter looks at statute. And so I know we're giving a bit of a whistle-stop tour in some of the key points here, but I would say there's probably about 4 to 5 acts that you really need to be aware of. The first 2 are things that you've met before at certificate level. And again, if you've done MO5 recently, the certificate looks primarily at these from the focus of the fact that the Marine Insurance Act now has kind of, it's still in the background, but it's been overridden when it comes to presentation of the risk. So we now look at the Consumer Insurance Disclosure and Representation Act 2012 for consumers, and we look at the Insurance Act 2015 for commercial customers. And remember, the duty is slightly different depending on what you're looking at. So for consumers, they have to take reasonable care not to make a misrepresentation. And for commercial customers, they need to provide a fair presentation of the risk. A couple of other statutes to be mindful of: the fact that the Enterprise Act 2016 amended the Insurance Act 2015 to incorporate an implied term that all sums due to a client must be paid within a reasonable time. These are essentially claim payments, and clients can now charge for late payment damages. I would also remind yourself of some legislation in relation to third parties, namely the Contracts Rights Against Third Parties Act, Rights of Third Parties Act 1999, which is excluded from the majority of insurance policies because it alters the doctrine of privity of contract. So if I have a contract with one of you, in law, generally only you and I should be able to enforce it and have obligations underneath it. This act amends that, but insurers want to keep the doctrine of privity of contract as is, so that their liability and their obligations only are for the insured themselves. Not to be confused with the Third Party Rights Against Insurers Act 2010, which essentially looks at third parties having rights against insurers, perhaps when the insured themselves has become insolvent. So they kind of get over that middle ground, and they're not a supplied credit, a creditor or anything like that. In insolvency proceedings, they can go straight to insurers and say, I've got an existing claim. So just to remind you of those. The last part of this chapter looks solely at financial crime. So I would say in terms of money laundering, remember the stages of making it clean money. So placing, layering, integration. I would also focus on, actually, there's a whole list of acts and regulations in this chapter. They're all relevant to know. I would say the main 2 to be mindful of are the Criminal Justice Act 1993 and the Proceeds of Crime Act 2002. They're your key ones for knowing the offences of what money laundering essentially is. And then they also look a little bit at bribery. So this is the Bribery Act 2010 with 4 offences, nice and straightforward: bribing someone, being bribed, bribing a foreign public official, and then again this passive aspect of failing to prevent bribery. So that is my key point. They're my key points for chapter 1. I'm going to pause there for a second, and then we will move on slightly to chapter 2. This, remember, is still learning outcome 1. So whereas we've looked at the legal side of things, we're now looking at the regulation side of it as well. So it's within that 17 question bracket. Now, regulation you've also done to death. The new kind of areas that this book focuses on are these key terms and key definitions in the first part of this chapter. So I'm just going to roll through a few of these. They talk firstly about this concept of a defined non-investment insurance contract is essentially a contract of insurance that can be general or it can be pure protection contracts. An intermediary is someone who, for remuneration, takes up or pursues insurance mediation. You'll notice that lots of